The bank is never going to tell you about this loan. Not because it's a secret, but because it doesn't need your pay stubs. It doesn't need your 2 years of tax returns. It doesn't even really care about what you make. If you ever thought, I'd love to own an Airbnb, but there's no way I would qualify. I'm Jon Taw, mortgage broker, and my team helps families in 49 states. I've got access to more than 140 lenders and over 400 loan products. And one of them was built exactly for this. Somewhere in these 400 loan products is the one that fits you. Give me a second. Before I get into it, one honest question. Type it in the comments right below. Do you think you qualify to buy a short-term rental this year? Yes or no idea. No wrong answer. We're coming back to it. Let me tell you about someone. I'll call her Nora. Nora is a nurse, great with money, terrible on paper. She writes off everything, like a lot of smart people do. So her tax return makes her look like she barely earns an income. She went to a bank, asked about buying a little place to rent as an Airbnb. The loan officer looked at her return, made a face. Your income doesn't support this. She walked out feeling small. And here's what the loan officer missed. The loan we're looking at now doesn't grade Nora. It grades the house. The little place she wanted could book around $3,400 a month after we run a conservative estimate. The full monthly payment, everything in, was about $2,700. So the property brings in more than the cost. That number, income divided by the payment, is called DSCR. Hers came out to be 1.25. So the property paid for itself, and Nora qualified, not because of her return, because of the house. Now here's the part that gives me chills. Nora's not just buying an Airbnb. She's buying something she can hold for 30 years. Something she can hand to her kids. That's the trajectory of a whole family changing, and that's a beautiful thing. The bank was grading you. This loan grades the house. The house doesn't care what your tax return says, because here's the trap. The tax code basically rewards you for looking broke on paper. So you do a fantastic job looking broke, right? Then you go buy something, and that same paper goes, well, you're broke. You did that on purpose. Congratulations. So what is this thing? DSCR stands for Debt Service Coverage Ratio. It's a fancy name. It's a simple idea though. It just asks one question. Does the property make enough to cover its own payment? You take the rent it can bring in, and you divide it by the full payment. Principal, interest, taxes, insurance, and any HOA dues. If that number is over 1.0, the property carries itself. Ask yourself honestly, have you been assuming you're the problem when really nobody ever looked at the house? Quick thing, because this trips everybody up. Okay, John, how does the lender count Airbnb money? It's not a steady paycheck. Good, that is the right question. There are basically 3 ways a lender may look at it. 1, if you already own it, they can use your actual booking history. That's the strongest. 2, if this is brand new to you, they can use market data on what similar places nearby actually earn. And they haircut it. They shave it down to a conservative number on purpose, so you're not betting on a perfect month. 3, in some cases, an appraiser gives a rental estimate. And no, they're not taking your word for it. You can't just tell the lender, trust me, it'll book. Lenders are immune to charm. Believe me, I've tested it thoroughly. Do you already have a place, or are you starting from zero? Because that answer changes which door you walk through. So if it's not your income, what are they looking at? A few things, and these move by lender and by your situation. Your credit matters. Many programs are starting around 620, and a stronger credit tends to open up better terms. There's usually a down payment, often in the 20 to 25% range for this kind of loan. They usually want to see some reserves, meaning money in the bank after you close, so a slow season doesn't sink you. And they want that coverage number, the DSCR, in a healthy spot. None of that is your pay stub. None of that is explaining your write-offs to a stranger. Which of these 4 feel solid to you today? And which one needs a little work? The gap is in your plan. It's not a no, it's a next step. Now let me protect you from a mistake that wrecks more of these than anything else. It's not the loan, it's actually the city. More short-term rental deals fall apart because the property can't legally be an Airbnb than for any other reason. An HOA bans it. A city changes the rules. A neighborhood says no. So before you fall in love with a place, do your homework, real homework. Check the city and the county rules on short-term rentals. Some cities make you get a permit. Some cap how many they hand out. Some have banned them altogether. If there's an HOA, read the bylaws line by line before you sign anything, and ask your realtor directly, can this specific property legally be run as a short-term rental here? A good realtor will find out before you write an offer. That's their job, and it protects you. Do your due diligence and lean on people whose job it is to know. That's the kind of thing I pre-underwrite with people before they're in too deep. The loan and the local rules check together so nothing blows up after you already fallen in love. I don't want you to wait 3 more years trying to make your tax return look good enough for a loan that was never going to look at it anyways. Every year you wait is the year that the property could have been booked, paying itself down, growing. It's not if you can own something like this. For a lot of people, it's when. And I want you to hear the honest version, not the hype. Some of you aren't ready this month, and that's fine. Then we build a plan and walk with you till you are. Remember what you typed at the start? Yes or no idea? If that answer, just move. If you walked in sure it was a no, and you're not so sure, drop what you put now, right under what you have put then. That's the gap. That gap there, my friend, right there, is you getting educated in real time. So if any of this landed, take a breath. You're not behind. You just had the wrong map. I put together a simple 1-pager on how lenders actually score a short-term rental. What counts, what doesn't, it's free, links below. If you rather ask a question, you can text me. That number's down there too. And if you got a specific place in mind, or you just want to run the numbers to know what it could look like, let's talk. 10, 15 minutes. We'll run through the numbers on your actual situation. I won't pressure you. There's no pitch. I'm just here to help. Next, I'll show you how much you really need to put down on one of these puppies, because the number in your head is probably higher than the real one. Reality is sometimes actually sweeter. I'll talk to you and see you in the next video.